Hey everyone, welcome back to Crypto Cash. Thanks again for joining me here. Hope you're having a great day. We're just going to do a quick update from our earlier analysis video here. If you're curious why the poop emoji is on the charts, that's pretty much just the general consensus for Bitcoin right now. We still haven't broken this descending trend line. I think it's best to presume a rejection off 67K as a possibility, distinctly because 67K was a strong support previously and in turn should work as a resistance. So this is probably a strong likelihood of seeing a rejection here soon to the downside, more specifically likely when the Asian markets open. So that's just kind of some thoughts there. They do have a tendency of pushing or overextending the price action based on the direction that it's heading. So we will see here soon, but half that liquidation on the downside has been swept. So I'll go ahead and get a recount, see what's going on, and obviously just get perspective on what's up here. So thanks again to everyone for the likes from earlier. Wow, I think we had like 150 likes in the video from this morning. I know it seems like a small amount, which it technically is. You could do better, but the truth is it's definitely better than nothing. So do appreciate all the support. You're fantastic, and I know a lot of people were saying they'd like twice if they had the opportunity. So thanks again. Really appreciate that. I'm glad everything worked out too. Just quick heads up to our community. Thanks again for the awesome feedback. 34% on AVAX and 26% on Bitcoin. Those are two shorts that we took 5 and 2 days ago. So we're going to take a look here at back-end liquidation data, kind of see what's going on here. To quickly note, just to preface here for my earlier analysis, you can see the anticipation was for the price to come down. I'm showing you this because liquidation has mostly been taken care of. We saw that liquidation area between 65.5 and 66,000. And then, of course, we had a pretty high delta of shorts. So I'm very curious to see what that looks like now. Let's go ahead and double check the regular price action here. There we go, 66 to 65.6. That is hard to say, as low as 65,200. So majority of that liquidation got taken care of. There is still a good chunk, maybe 10 to 20 billion, as low as 64,400. Okay, so 64.5 is that macro fib level. I'm still, a proponent of seeing that level retested. I would say that 64.5 should be the lowest point which we see the price action. There's a lot of confluence there. I'll explain more here in a moment what that looks like, but the price does pull back. This area right here, if you can kind of see, 64.5, we got a 7 billion in liquidation right there at that level, and a good chunk just above that. So depending on the time frame you're looking at, there's quite a lot of liquidation still left. Now, is the price going to continue to run upwards? Possibly. We saw a lot of support at that 66K range, even though we lost it. We're probably going to see a closure above that, which is generally favorable. So we can't presume that that's been broken, that support range. So we'll see how that treats us. Let's look at the daily time frame first and kind of go from there. And quickly to preface too, by the way, Bitcoin dominance is increasing. Altcoins took a pretty big hit here today. Some of them are responding extremely well, like Solana, for example, SUI. The two I kind of called out earlier, not to short. While I was still not really liking the idea of taking a long, pretty much any kind of long would have been fine on both of those because they just responded super well. Again, identifying the altcoins that are performing well, contrary to Bitcoin, are ideally ones you want to invest in when situations like this occur. Again, there's a lot of support for Bitcoin, so you do, even though it is risky to take longs with altcoins, it's less risky to take longs with the coins that are inversely paired, if you will. Okay. Again, just throwing it out there. Anyways, I tend to cover those coins for the most part, at least the ones that are my favorites to trade, because honestly, Solana, SUI, Avalanche, ICP, those are all coins I've been trading for a long time, and you get kind of used to their price action, and they're a little more predictable than other coins, for example. So if you're wondering why I repeat a lot of the same trades or same coins rather, it's because you want to stick to what you're good at. Really, it's all there is to it. All right, so let's look at here. We'll have a daily time frame. We're above the 20-day SMA, right? So we wicked all the way down to that lower liquidation level. We're halfway through that. We still got a fair value gap as low as 63,200. So just know from a macro perspective, we're probably not done pulling back. Just because we attempted to retest, or we're maybe soon to retest the descending trend line, doesn't necessarily mean that it's just going to go up from here. Okay. It is good, however, of course, that we see this pretty strong hammer type of doji candle that does show a lot of buying pressure and implying that maybe the bottom is in. You never truly know, right? But key takeaway here is best practice is to wait for the descending trend to break. That being said, the ascending trend, the 20-day SMA, is still below the price action, reaffirming the fact that we're still bullish on the macro. That's just, again, some observations from some guy online. If we take a look here, of course, we can recognize that the RSI is tapering off as per usual. Money flow index, this is all normal stuff for a standard retracement. Okay, again, This is normal, all right, folks. So try not to run for the hills and think that where the sky is going to fall. I do think it's important to respect the fact that we could and should still continue to pull back. There's nothing here showing us that we're going to just take off straight up here. If somebody does presume or does say that, I think they're kind of full of crap, because there's literally nothing here that is giving us confirming factors to take along. While I understand buying the dip, watching it close, maybe a scalp of some sort, smaller time frames probably identified a lot of good shifts of momentum. In fact, our trading bots with my day trading community here, it really picked up on a lot of good longs, and we secured a good handful of profit that. In fact, I haven't looked in a little while, but if I'm not mistaken, we saw a pretty solid amount. There's ICP, SUI, Solana. There was a triggered stop loss for the previous Solana short, but all of our longs are in profit here. Okay. So again, it catches some pretty good stuff, and that's smaller time frame stuff. Those are things I don't cover on the charts here, because it doesn't make a ton of sense to analyze the 1 minute chart when it's going to be invalidated within 5 minutes, right? So that's kind of why you don't see me day trading, mainly because I don't really like the gray hairs, but that's a conversation for another day. So let's look here. We got the 20 and the 50-day SMA working their way down. That's generally a bearish sign. Until we close above those, that's roughly 67K or higher, we have really no consideration to take a long. I think taking a long into 67K is very foolhardy for two reasons. We got our not macro, it's more so our local point of control at 67 to 67.3, all right? Basically reaffirming that's a resistance level. So to me, it makes way more sense to short at 67 than to take a long, unless, of course, here's the difference here, is if the price action breaks above the descending trend, comes back down to retest, that's when you want to consider a long. You don't just breakout trade. I'm a breakout trader here at 67,000 as soon as it tests that resistance. That's not what you're supposed to do. You've probably gotten lucky a few times doing that and think you're like really cool, but it's not cool to lose money, and it's extra uncool to boast about how good you are about taking a high risk trade when all you did was get lucky. I'm just saying that from experience. There's no disrespect at all. It's just kind of how it works. You're generally going to find a lot of problematic scenarios if you're trying to trade against the grain. And the grain right now is going down. There's no other way around it. Key takeaway here, though, is, and I talked about this earlier, 30 on the RSI, common place for a bouncing point, right? You see a lot of dead cats occur right there. Basically, just implies that the overall sentiment is at 66.5 or 66,000. 65.6 rather. Again, those numbers are hard to say for some reason. That area in which we retrace to, that's a good value for the moment, right? People have that conception. But as the price continues to stay and maintain here for a while, and the price continues lower, people are going to start getting fairly sad and depressed in their position, right? The whole key takeaway of what I'm getting at isn't that sidebar. It's mostly the fact that when the RSI hits 30, people generally construe that as a positive sign. Not that the RSI is hitting 30, but because it's in a position right now where it hasn't been in a while, right? We're at 69.5 a couple of days ago, roughly. So the truth is, at this point, people still think it's a good value. That's why we're seeing a lot of buying pressure. But for the most part, the market makers, who do exist, by the way, they very well understand that there's going to be a lot of leveraged positions. They're starting to accumulate, and those levels can essentially get swept. In fact, why don't we take a quick look at that here? Let's just jump into the last 12 hours and see roughly what that looks like. Give you perspective here. When we look at this here, we can see there's a lot more leverage to the upside than the downside, basically implying a lot of people are trying to short still. Okay, so that in itself can lead to the price action jumping up to 67,000. People don't recognize this, but using leverage is essentially incentivizing the price action to go the wrong way in a lot of ways. You're using too much leverage, it's part of the problem and the solution. We wouldn't have this much volatility if it wasn't for it. But then again, there's that double-edged sword that, you big idiot, you big goof, why did you take a 100x leverage short at 67,000, or the inverse, right? It's just dumb. Anyways, to finish this little train of thought, I skipped over this earlier. 4 billion liquidation delta here, roughly at its highest point, or lowest rather, implying that we still have a lot of selling pressure, but if we maintain this for too long, that number gets too high. I would say 5 billion or higher, then we have a problem on our hands and the price is more likely to increase. Again, it's just kind of like critical mass, but at this point, we're just seeing this natural knee-jerk reaction of Bitcoin pulling back to what is considered to be as a good value right now. That's really all we're seeing. So I don't trust this pump here, if you want to even call it that. While there is a lot of volume, half of that is selling pressure too. So let's take a look at the hourly and just recognize here that the volume is tapering off quite significant. So once again, it's all well and good that we bottomed out here and we hit this little level, but look at how much selling pressure and how much volume there is right there. And then take a look at the buying pressure here. These last 4 candles, It's pretty wimpy, okay? So I don't like that. I do not like taking longs in situations like that. Even though the price will continue to run, what is happening right now is the bears are just literally waiting to pounce. They're waiting for the late longs to continue to pile up, and they're going to probably get destroyed here soon. Once again, this is just kind of commonplace in trading. I'm sure this will prove me wrong. The price will go up to 68,000 and then fake us out again or something. It's been a bit of a mess, but for the most part with these trend reversals, I'm pretty good at identifying that just based on the indicators that I use, and they have a good tendency of letting you know when to get in and get out. Right now, it's telling us that while we are getting close to the price action here in lagging span, it's still a green light to leave your short position open and to not consider taking a long. Even though I'm sure people, again, are rolling their eyes because they're up 2% or 200% on a 20x leverage trade when they had no business taking that long in the first place, right? Again, part of the problem, part of the solution. That's just how it goes. Either way, thanks so much again for watching. I hope this made sense. I would not consider a long position at this point. Wait for the price to break this key level resistance and to retest it. That's when you consider getting in, okay? That's what professionals do. That's what you should do. Jumping in right now with a long to the moon, as they say, is a very foolhardy consideration. So anyways, just some best practice. That's all there is to it. Is it always right? No. I've been wrong a lot, trust me. But hey, I'm right more often than I'm wrong, and I'm okay with that. That works well for me. All right, thanks again, folks, for watching. I hope you learned something. Again, comment below if you get a chance, like, subscribe, follow. Don't forget to check out Bitunix too along the way if you haven't already. It's part of our community. You're automatically eligible for it. Check it out. It's cool stuff. All right, thanks, folks. Have a good rest of your day. Oh, I'll post our playout chart here on Twitter, Telegram, and Discord, of course. Thanks. See ya.